Welcome back. Standing by for the latest economic growth figures. This is for the March quarter. There'll be plenty of other information as well released with what are called the national accounts. I've got our political editor Andrew Clennell here in the studio and our business editor Ross Greenwood with me. Ross, we're waiting for the figures. You can bring them to us live and talk through all the implications, including the major banks upgrading their forecasts yesterday.
They did indeed, and so really what's expected here when it comes out is that the quarterly number, which was very strong in the December quarter because of the recovery from COVID. So you can see here what the banks have done. They're now saying for the quarter around 0.7%, about 3.1. Here we go. So we've just had a drop right now. So it's risen by 0.8% for the past quarter, and so that means that the annual growth number that the Chalmers and the Albanese government are inheriting 3.3%. So stronger even than these forecasts here. So just repeating that the quarterly economic growth for Australia at 0.8% and the annual growth of Australia's economy over the past 12 months, 3.3%. So this is stronger than anticipated by the markets. It also says something about inflation because quite clearly what it means is that there is going to be ongoing pressure on the Reserve Bank to continue to raise interest rates as early as next week. We'll get you more of the details as we go through this to see what other contributing factors and which are the fastest growing areas of the economy as we go through this now in the next couple of minutes, Tom.
Yeah, you mentioned there. So the first thing we think of is, right, more possibility of an increase in rate rises. And when we talk about the money being spent, yes, there's a rising cost of living, but let's not forget people were so cashed up with COVID, both because they'd got ahead on their home loans, but also these payments. So I'm just looking at household saving ratio decreasing. It was 19% at the last quarter and went down to 13.4, now down again to 11.4. So this is basically with all this money that people were stowing away, no longer doing that, and then you've got money being released and spent in the economy, and that, as you alludes to, contributes to inflation.
So this is the point. So one thing is that as costs are rising for households and for businesses, effectively what's happening is that individuals are having to really start to actually dip into their own savings to be able to afford to maintain their lifestyles and indeed for essentials that they really do need. And so what you're seeing is some of the savings that were built up during the pandemic that were in many cases given by government support, the $350 odd billion that was handed out amongst other things with JobKeeper, a lot of that money was sitting in bank accounts. And so now as costs start to rise, families are using those savings buffer to cope. Now, of course, there are some families that won't be able to cope, some businesses that won't cope, and you can see that in the construction industry. But really what this is showing is this is good for the ongoing employment prospects of Australia. It's good because what you've seen is a growth in inventories and a growth in company profits. It's contributing to this growth. And so that means if you've got strong companies and they're building up their own stocks, then you're likely to see this ongoing demand for employment, which is a thing that really is keeping many Australian families going right now.